You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Monday, June 3rd, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Monday. The first thing to know is risk aversion escalates amid trade threats. Global stocks and commodities fell on Monday, while safe haven demand bid up prices for sovereign debt as escalating trade tensions and new tariff threats exacerbated worries over a possible global slowdown. In the ongoing Sino-U.S. trade dispute, China increased the pressure by accusing Washington of intimidation and coercion and dubbed U.S. demands as exorbitant. Beijing also opened an investigation into FedEx after Huawei said it diverted to the United States 2 packages intended for the company's offices in China. With U.S. President Donald Trump's plans to place tariffs on all imports from Mexico to the U.S. underway, a senior Mexican delegation was set to begin high-level talks on Monday in Washington. Broadening the scope of trade tensions, the New York Times reported that the White House trade advisors had urged the imposition of tariffs on Australian aluminum, whose exports to the U.S. have surged over the last year. Trump, meanwhile, traveled to the UK on Monday for his first official state visit after urging Britain to walk away from negotiations with the European Union if it could not get a fair deal on Brexit. The second thing to know today is global manufacturing is in contraction ahead of US ISM. Purchasing managers' indexes from around the world showed that manufacturing activity either contracted or stagnated in May. Manufacturing PMIs were below the 50-point mark, separating contraction from expansion in Japan, South Korea, Malaysia, and Taiwan. China's showed modest expansion at 50.2, although the official government gauge on Friday also showed contraction. The Eurozone manufacturing PMI registered at 47.7 in May, its 4th consecutive contraction, only slightly above a 6-year low. For the U.S., the Institute of Supply Management will release its manufacturing PMI at 10 a.m. Eastern on Monday. Economists expect the gauge to remain in expansion with a slight uptick to 53 after hitting a 3-year low in April. The third thing to note today is Apple preps for WWDC. Apple will kick off its Worldwide Developers Conference at 1 p.m. Eastern with a stage presentation by company executives. Apple is expected to present the latest version of its iOS operating system, which a Bloomberg report suggested could have new, faster animations, for the multitasking interface and for closing apps, along with improvements to the iPad and updates to Apple-made apps. WWC, which focuses on software, is one of the company's corporate events of the year, but takes place this year under the shadow of the spreading trade war, which threatens to cap Apple's growth in the vital Chinese market. The fourth thing to know is Boeing warns of defective parts. Boeing announced on Sunday that some of its 737 planes could have defective parts in their wings, adding to the problems it faces getting its 737 MAX planes back in the air. The Federal Aviation Administration indicated that the issue would not bring down the plane, but could damage it while in flight. Separately, the International Air Transportation Association announced Monday that it plans to hold a meeting on June 26th with carriers, aircraft manufacturers, and regulators to discuss the preparation of a unified message on the 737 MAX's return to service. The fifth thing to know today is Google slumps after network congestion caused an outage. Shares in Alphabet fell more than 3% in pre-market trade after its Google unit experienced high levels of congestion in the eastern U.S. and brought down several of its services, including Google Cloud, G Suite, and YouTube on Sunday. Google later said it had identified the root cause and resolved the issue without providing specific details. Snapchat, owned by Snap Inc., also experienced user issues that some attributed to its use of Google Cloud. Our second story of the day is from NASDAQ.com. Gold hits a 2-month high as global tensions bolster safe haven demand. Gold prices rose on Monday to their highest in more than 2 months on worries that U.S.-Chinese trade tensions and Washington's threat of tariffs on Mexico would hurt the global economy. Spot gold was up 0.7% at $1,314.20 per ounce at 10:12 Greenwich Mean Time after touching its highest since March 27th at $1,315.59. U.S. gold futures rose 0.6% to $1,319.50 an ounce. Safe haven buyers are coming back to gold again due to tariff talks, which is encouraging for the metal, said Ross Norman, chief executive at Sharps Pixley. And our third story of the day is from investing.com. Bonds are on fire as flight to safety gathers momentum. A stampede to safety sent benchmark government bond yields tumbling on Monday, hoisted by the Swiss franc to its highest in nearly 2 years. It sent gold to a 10-week peak and left oil heading for bear market territory. After a torrid May that wiped $3 trillion off global equities, the worsening trade tensions and broader economic backdrop made for a jarring start to June. European shares and Wall Street futures both fell further after Beijing sent another shot across Washington's bows on trade, and then Eurozone data came in weak, though the main groundswell was in bonds. German government bond yields fell to a new all-time low, and those on two-year U.S. Treasuries, were trying for their biggest two-day fall since October of 2008, while the global financial crisis was kicking off. Bonds are more or less on fire, and I think we're going to spend the week with trade dominating everything else, said Société Générale global strategist Kit Jukes. With German and UK political concerns and worries about Italy's finances resurfacing too, it's hard to think the yen is not going to be at least one of the winners this week. Japanese currency consolidated Friday's biggest one-day jump in over 2 years at 108.40 yen per dollar, though Europe's go-to safety play, the Swiss franc, kept the rally going by scoring a near 2-year high against the euro. And that, ladies and gentlemen, is news you can use for today, Monday, June 3rd, 2019, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great week.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.